Okay, so we're almost to the end. Last little parts we got, so we're going to start off with bad debts. Ooh. Now, usually bad debts happen in this. When a taxpayer sells goods or services on credit and the account receivable later becomes uncollectible. Another fun little item that we've learned in 2301. But a deductible for bad debts is allowed up to the amount that was previously included in income. So you can already see that this is only for the accrual method, not for cash. Cash wouldn't have included bad debt anyway. But taxpayers must use a specific charge-off method. Okay? The IRS will require proof that the debt is worthless as well as the amount of worthlessness. Basically, they want you to prove that this person hasn't paid and they're never going to pay. They're not going to pay for their stuff. That's as simple as that. So, when we look at business and non-business bad debt, again, debt arising from taxpayers' trade or business are classified as business bad debts. Okay? All other debt is considered non-business, which then is also, again, has to be determined for worthlessness and can be deductible on Schedule D. Business bad debts are ordinary deductions, simple as that. Non-business bad debts are short-term capital losses, which are netted against other capital gains and losses and subjected to that $3,000 per limit. So, again, Schedule D. And we're going to discuss about all this fun stuff about capital gains and losses when we talk about Chapter 4. Yes, another future item. So we're going to table that for right now. We really care about business bad debts. Again, this is the business chapter. So, example, we have Kiko, and this person is a dentist, and they loan her friend Lars. I'm having a little thing of Steven Universe all of a sudden, of $20,000 to start an upholstery business. Yeah. And of course, Lars cannot pay Kiko. Is this a business or non-business bad debt? How much may Kiko deduct in the current year? I want to tell you real quick that we know since it was a loan to their friend. Okay, wait, I got ahead of myself. Make sure you pause, see what you think. Okay, anyway, since it's a loan to her friend, it's already non-business. It's not part of any business, and it's $20,000. Well, net to your short term, you're probably going to be able to deduct $3,000. Let's see. So, as you can see, went the other way. This is a non-business bad debt, and again, we're limited to that $3,000 of deduction against any ordinary income in any 1 year. But the awesome thing is that it does keep carrying forward until we use up the basically loss. The only thing she has to do is prove to the IRS, if they ask, that it is deemed worthless. Poll. There's another poll. So, your clients, Tom and Terry Trendy, have a son named Tim. They stay with T. Age 27. Tim lives in Hawaii, where he studies the effects of sunscreen on his ability to surf. Okay, that's an odd scenario. Last year, Tim was out of money and wanted to move back home. To prevent this, Tom lent Tim $20,000. Wow. He did not want him to come back home. With his understanding that he would stay in Hawaii. Tom had Tim sign a former note including a stated interest rate and payment due dates. Tom has a substantial portfolio and has generated a significant amount of capital gains in the current year. Okay. He concluded that Tim is a deadbeat and the $20,000 note is worthless. Tom wants to report Tim's bad debt on his and Terry's current tax return and net it against his other capital gains and losses. Would you sign this paper of declaration on this return? Oh Lord. Well, we find out that there is probably some family issues going on, especially when your dad basically thinks you're a deadbeat and I'm going to loan you $20,000 so you don't come back home. Wow. So, okay, think about this. Would you sign or would you not? Okay. So again, since this is a poll, it's not really a correct answer to this question. But if payment dates have passed with non-payment, and Tom has the documentation of that, as well as proof of his attempts to collect the payments, that would support their decision to sign the form. Basically, would support our decision. Because again, you got all the proof to show that it's worthless. The guy never paid. So thus, it can probably be written off. It's just, that's a strange family dynamic. Okay, so that's going to conclude about bad debts. Next little item that we're probably going to hit is the office and the home, which is another really fun topic.